Okay, let's start right from the top with the SPY. Once again, I'll open up the floor. Any comments, questions, or trades? Um, we are all caught up on topics, on questions, on comments, on trades as of last week. We really cleaned the slate last week. At the end of this, at the end of this, I will post the recording in the room. I'll probably post like the last maybe 2 or 3 sessions in the room, just in case you need to catch up with some of them. I know some of you have maybe emailed me. I am behind on emails. I did notice yesterday that there were a couple of emails that I need to get back to people, and most of them were questions about getting recordings of prior sessions. So let's start with the overall market, the SPY. This again, this is how I start my scanning. Probably, I was going to say on a daily basis, but that's not true. It's probably more like a Monday, Wednesday, Friday exercise for me these days when I'm out there taking a look at the general market and on the stock and hunt for swing trades. So really, I mean, you must to a certain degree be tired of me talking about this, but I can't help myself. Probably one of the most perfect power uptrends I've ever seen in my trading career is this daily on the SPY. Even take a look at this current year, which is hard to believe it's almost 3 quarters over, but it was constant, beautiful 45-degree uptrend, about 1 month of a little pause, and now just grinding on that almost perfect 45-degree angle. Does that mean that the 20 moving average never gets threatened? No, that's not true. This 20 moving average, although not frequently, has been threatened and has been broken, but not very often. So I'm circling 3 areas here. And in these 3 areas, let me show the B for break and P for just a piercing. So think of about how strong this uptrend has been. We're talking since March or April, one break, and I put these two together because it broke here, but then just sort of dauntled down there, and then here. Was this going to be a break? No, just a piercing. Was this going to be a break? Just a piercing. Still, so far to this date, we are in the longest running, most hardy, most sturdy, most strong bull market that I've ever seen. And I think it's broken all historical standards, right? What are we into now? At least the 12th year, if not the 13th year of it. Does that mean it cannot end tomorrow? Sure, it can end tomorrow, but we're not clairvoyant, so we trade currently what is. Are we probably, just this is common sense, not technical trading, but are we much closer probably to this bull market ending or taking a pause than we are, that it will go another 12 years? Sure, sure. Again, just common sense. Should you be paranoid and all frightened about the bull market? No. Should you think like the next moment's going to turn to the bear market? No. I would say you just keep trading what is until that changes. So, and I know people in this room, every time there's been a pullback, and we've had these discussions over the course of the last year or two, every time we've had these pullbacks or initial breaks of the 20, it was like, okay, it's over. This is going to drop and then break to 200. And it never has come close. So let's say you do decide to trade a short idea. Let's say on this break here, you went short. Let's say even in full IFT form, you felt it made a lower high, a lower low, and then that started being taken out. So you tried something like a catch play here, or you actually went short the break. My guidance for you, prudent guidance from an IFT perspective, was try your short ideas as much as you want, But if the price action gets back above the 20, please be prudent. Whether it was just piercing or breaking to the upside of the 20 or taking out the former all-time high, at some point, just get out, or else you're in for an awful lot of pain. And you might be thinking, oh, this is the longest bull market ever. This is the end right here. This has to be, and all of that, just to be clobbered and start making more all-time new highs right after one after another, including 3 trading days ago. Right? Right there, all-time new high. And what have we received so far from that? Just a gentle little pull back into the 20. So that's the overall market. Potential trade idea, depending on your trading plan. Potential VBS lining up here. Hasn't triggered. I agree, Matt. Now, what do you do as far as VBSs are concerned? Number one, do you have the direction of the 20? Yes, you have an uptrend. Check. Number two, where are you in market law 4? Well, let's say you felt that this was a pause and a rest here. You at least have 1 move, 2 moves, 3 moves, 4 moves, 5 moves, 6 moves, probably starting to get beyond your 3 to 5 to 8 moves. So this trend is getting a little bit older. That's all. It's not meant to scare you out of it. It's just meant that you're cognizant and you're knowledgeable. Then, do you have your market law 3 pullback? The answer so far is yes, right? The average of 3 to 5 to 8 bars back into the rising 20 moving average. And then lastly, here's what we do not have yet. You wait for your event at a location. For me, and it looks like it got very close here, entry would be about there. For me, I would use the very narrow stop, but that's just me. I would place it there. Why? Because if I even only got back to the former high, I'd be in defensive mode. Once up 1R, don't lose money. Once again, this may not be appealing to you. It may not be one of your strategies. It may not be something that you trade. This is the SPY on the daily. It may not be the time frame you trade. I could go on and on why it might not be your trade, but if it is, once again, looks like we're setting up for another VBS. At the moment, does that mean today's bar cannot suddenly decide to look like this? Sure, it could. That could happen in a heartbeat, but right now it's not. Okay. Here's one more thing I want to show you. Now don't forget the SPY. The SPY is a $450 stock or ETF. I keep saying stock. I use the phrase stock ETFs all collectively. And for some people, this is a reality. Other people, it's just psychological. If you have, let's say, a smaller account, $5,000 account, $20,000 account, how much of a $400 stock can you buy, particularly if you're trying to trade other things? I point this out because here's another one. Whoops, I'm sorry, I grabbed the wrong one. I apologize. Here's the SPXL. Now, if you look at this, the pattern looks exactly like the SPY. But this is a leverage ETF. It can move very dramatically in comparison. In other words, if you want to say the ferocity or velocity of this, which is good when it works out for you, not good if it's going against you. But this is only $100 or $120 ETF. So again, I just mentioned that because, if you hear me here or Dan in the equities room refer to the SPYs, remember there's other symbols that do the same exact thing, right? Let's see, what's this one? Here's the SSO. Now this is not leveraged, and this is the S&P 500 again. Again, look at that chart. Look at that pattern. You would think they're all the same chart. You would think they're all the same chart, but they're not. The first one was the SPY, which is the ETF that just strictly tracks the S&P 500. This is, and what this looks like to me, this looks like, what is it? It tracks one, it puts a 1/4 weighting, so it's more of like $125 stock right now, or 1/3 weighting, something within that category, so that the price point is less, but it's still tracking the same exact thing. It's the same exact pattern. And then you get into those leverage ETFs. And the only thing I'll mention with the leverage ETFs, again, just be careful. When they work for you, the velocity and ferocity can compound your earnings faster. When they work against you, it can if you lose control of it, it can compound your losing exponentially. Exponentially is probably too dramatic or too much of an overstatement, but it is significant. So let's get over to the Qs. I always like to take a look at see what technologies. After I look at the whole general market, I like to see what technology is doing. And it's interesting, but it looks like technology is maybe starting to flatten a little bit in comparison to the SPY. Not much though, and here's all I mean. If you take a look at the trend itself, still definitely an uptrend. But as of late, just starting to flatten a little bit more or lose a little bit of velocity. And take a look at this. Definitely working on an equal high area here. Definitely bumping its head into something there. So we'll see. At the moment right now, my guess the higher probability at the moment is that technology does take out this former high here and continues higher, and that the S&P 500 in suit does the same, because remember, the QQQ represents technology. The SPY represents the overall market, the top 500 stocks, the S&P 500. The QQQ represents the top 100 technology stocks. And for at least the last 10 or 20 years, technology has been the main driver of the overall market. So that's why I always like to look at one and then go to the other. I look at the overall market, and then I go and look at the main driver of the overall market. So could you do the same VBS idea off of this chart? I would say yes. I would say yes. A little bit more, not as clean as the SPYs, but let's say you entered at the top blue line, put your stop very tight underneath. My main concern, though, again, would be getting above this former high area. Could you work out one-to-one, don't lose money there? Sure. If it triggered, you could. So now the SPY, not the SPY, the QQQ is a $360 or $370 ETF. Here we have the TQQQ, T as in Thomas, QQQ, which again is just a lower price ETF that tracks the same thing as the QQQ. And I do believe this one might be slightly leveraged. I think this one is slightly leveraged. This may be one-time leverage. I know it's not 2, 3, 4, 5 times. And this is $130. So this looks like it's weighted to be about one third of the value of the QQQ. So now I've gone over the overall market, looking at the daily on the S&P 500. I've taken a look at the main driver of the overall market being technology via the QQQ. I usually do one of two things. Well, I take this back. I usually do both these things. It just depends on what order I do them. I usually take a look at the general market and the QQQ. Now, from a swing trading perspective, all the way down from the daily to the 15-minute, right? I could find a nice swing trade on the 15-minute. I could find something that might trigger on the 15-minute on the QQQ or the TQQQ, which might last for a few days. Or I start going to other sectors, right? What's the hierarchy? First, the overall market. Then I believe technology as the major driver of the overall market. Then sectors. Then industries. Then individual stocks. But first, let me grab Brian's question here. Brian, you're going to have to help me what you're asking. Are you asking my opinions about IPOs, or are you asking my opinions on the daily charts? I'll take a look at the daily charts. Let's go to Coinbase, COIN first. Yeah, but what are you looking for, Brian? Give me a little bit out of your trading plan. I'm going to go to the daily chart since you asked, but are you looking for IFT plays, gift plays, whatever? Here, we'll walk through this one. We'll walk through this one, okay? Now, there's not much data beyond this. This is basically, now we're talking. Now you're asking me something specific. Okay, excellent, Brian. Excellent. Let's walk through this. So let me just get a yes or no from you. This is COIN. That's a stock. This company came into existence in April, the latter part of April, and this is the daily time frame. And just to make sure we're on the same page, are you asking me whether there's a potential VBS setup here? Is that what you're asking? Okay, let's walk through it. There's 4 things. Now, if you're interested in VBSs, VSSs, there's a whole chapter in the manual, probably the longest chapter in the manual, that covers them. Over time, I've reduced it down to 4 bullet points for myself. It's like, is this there? Check. Go to bullet point number 2. All right, what's the story with bullet point number 2? Check. All right, go to bullet point number 3, number 4. So let's walk through those bullet points together. What is the very first bullet point? You may have heard me talk about this many times here in this program, or many times in the Forex program or the equities program, or you may have never heard me speak about it at all, and you might guess. What is the first bullet point that I look for? What is the first bullet point that I look for when I look for a VBS? Yes, a VBS, Brian, you nailed it. A VBS must have a rising 20, and a VSS must have a declining 20. Now, not only Brian, everybody weigh in here. Do we What do you think we have here? It's only one of three things. Do you think we have number one, a rising 20, number two, a declining 20, or number three, a sideways 20? What would you vote on right now on this daily chart on COIN? One rising, two declining, three sideways. I don't know what R20 is. It's one, two, or three, Matt. One rising, two declining, three sideways. Okay. Two people rising, everybody else sideways. I'm with the sideways people. I'm with the sideways people. Take a look at all that. It's really sideways. Now, if the only thing I was looking at was the last 6 bars, I would agree that it looks gently rising. But I want to take the whole chart into consideration. Now, on the other hand, don't forget, some of this gets very subjective. So I'm not saying the people that said rising is wrong. I'm just saying that their eyeballs are focused on a very tiny part of the chart. They're not taking in the full chart. Okay? So to call this a VBS right now is wrong. But let's go a little bit further. Let's go a little bit further. We cannot call this a VBS. We cannot call this a VBS because when you really take the whole chart, we don't have a rising 20. Maybe over the last 6 bars, but we'd be forgetting about the rest of the chart. But there is an IFT concept here that I went over a week or two ago as far as strategy. But let me take Ryan's question first. Is it breaking out of a base? I want to stay within IFT terms, okay? So I'm going to keep it in IFT terms. Let me scroll back just a little bit. Whoops, I cannot scroll back too far, that's right, because of the limited data on the screen. I prefer using the word not breakout, Brian, because breakout is a specific IFT strategy. Breakout is a specific IFT strategy. We use the word ignition out of a base. All right, IG for ignition. It's what you're talking about, Brian. I'm just giving the more common IFT vernacular about it. So, if you looked at this as equal highs here, the horizontal line, and all of a sudden you have this contiguous bull elephant push, is that potential ignition out of the base? The answer is yes. So that's the answer to your question. From an IFT perspective, that is potential ignition out of the base. But it still doesn't create a VBS. James, what is the number one thing you need in order to have a VBS? I thought you were one of the people that answered earlier. What's one of the potential, what's the first item you need in order for a VBS? Nope. Uh, yeah, James, maybe you just joined us. I thought you did answer the question before, right? I'll go through it one more time real fast. Now, again, I highly encourage you to study the chapter on VBSs. It's a very thorough, long chapter. VBSs and VSSs, but I boil it down to 4 bullet points. Number one, you need a rising 20. So James, do you see a rising 20 here? Yes or no? Just give me a yes or no, James. Do you see a rising? So there, no VBS. I don't care about the pullback, all that. You can't call this a VBS. Done. Done with the VBS. I'm really being very, very, well, not very, very dramatic, slightly dramatic, because I really want to create these mental images. So turning around and saying, oh, there's a potential VBS here. No, there's not. There's no rising 20. But there is a potential IFT strategy. And it does have the acronym VBS in it. I'm looking for one other word. There is a potential VBS blank play, fill in the blank. There is a potential VBS blank play. What's the word I'm looking for? We've gone over this in this program. If you're in the equities program, I spent 2 days on it about a week ago. What's the phrase that we use? A VBS blank play. It occurs after a market law. It can occur after a market law 4 completion. Trying to give a lot of hints here. Nope. A breakout and a gift are 2 separate strategies. Have you ever heard, and you may have just not heard of it. You may have not just heard, you may have never heard of it, even though it's been covered. I said last week, maybe it was a week before, but basically I went through the whole cycle of market law 4, and at the end of that I gave a bonus lesson, which included the and you know what? For me from now on, I'm going to drop the VBS VSS part of it. It just dawned on me because I think that creates too much confusion. I'm just going to start calling it like we do in the Forex program, just the catch strategy. Because it is not a VBS or VSS because it does not have a rising or declining 20. But follow this. Follow how I put the IFT components together here, based on what caught Brian's eye here. Let's take a look at the market law 4 cycles first. All right, remember, this stock has only been trading since April, so this is all the data that exists on this stock. Okay, so here we have a downtrend. Let's talk about market law 4. Did this downtrend change to something else? Yes. Let's go through the 3 steps of market law 4. Step number 1 of market law 4. Do I have my 3 to 5 to 8 moves in the trend? I would say the answer is yes. 1, 2, 3, 4, 5, 6, maybe even 7. Okay? So this trend has been going on for several moves. Wonderful. That's all you want to know. Where are you? Are you in the first couple of moves? Are you in the 475th move? Are you in the 23rd move? So this is moved, within the average range of 3 to 5 to 8. And that's all that 3 to 5 to 8 signifies is the average. Next, do we have a market law 2 break of the downtrend? Number 2, Do we have a market law 2 break of the downtrend? I would say yes, right in here. At the absolute latest, right in there. Why? What's a market law 2 break? One bar closes above and another bar goes further. It almost did one here, but it definitely did one by here. So, number 2, when you have a market law 2 break of a trend, that all that means, it does not mean an immediate change from a downtrend. It does not mean an immediate change of a trend. It just means the current trend is no longer dependable. So if you were looking for short opportunities, guess what? No more short opportunities at that point. The downtrend is over. Now the third part of market law 4, confirmation of the new trend. Confirmation of the new trend. Let me ask this question. From your perspective, this downtrend, did it change from a downtrend to number 1, back to a new downtrend? Number 2, from a downtrend to an uptrend? Or number 3, from a downtrend to a sideways trend? Which one would you vote on? There you go. There you go. So how do you know it ultimately went from a downtrend to a sideways trend? Now follow this. Part 1 was the former downtrend had 3 to 5 to 8 moves in it. That's your average. This one we counted 7. Number 2, you have your market law 2 break of trend. Okay. Then the next one is your market law 2 confirmation of change of trend. Well, what do we decide? We take a look at this and we say we created one equal high, one equal low, second equal high, second equal low. It's right in here where you can say, oh, we went sideways. Look, we have 2 equal highs, 2 equal lows. The second set of equal highs and equal lows is your confirmation that you're going nowhere but sideways. That's the third part, right? Number 1, how many moves down have you had? Oh, we've had about 7. Okay, that's fine. That's about the average number in a downtrend. Number 2, where was the downtrend broken? Right here. The first time you had a market law 2 break of that downtrend. Now, number 3, am I making new higher highs and higher lows? That means I went from a downtrend to an uptrend. Or am I making new lower highs and lower lows? That means we've resumed a downtrend or created a new downtrend. Or number 3, are we creating equal highs and equal lows now, which means we've gone from down to sideways. So now let's do all that over again. Let's do all that over again. Equal high, equal low, equal high, equal low, equal high, equal low. Now, these equal highs and equal lows are not like perfect to the penny, but you could get the feeling of it. It's just, going sideways right now. Now, and this is what caught Brian's eye. Now, out of all this sideways movement, over a period of about 3 to 5 days, we get this bull elephant move taking that out. Oh, guess what? Our sideways trend was just broken here, right? One bar closes above, another bar goes further. So, number 1, after 3 to 5 to 8 moves on average are going sideways, we then, number 2, have a market law 2 break of the sideways trend. I'll call that market law 2 break of the sideways trend. Now, let's talk about the higher highs and higher lows in this case. And I hope walking through it like step by step repetitively is helping you. We formed our first higher high. And I would say it looks like we might be forming our first higher low. And I really like where the higher low is forming with possibly what was resistance is becoming support. Excellent, Brian. But I cannot call that a VBS. Why? The 20 really hasn't had time to start moving upwards. So what do we use as the final barometer that we move from a downtrend to an uptrend? We would need to take out the first higher high. You form higher high number one, higher low number one, and then that's taken out. That's the first time you could say it looks like we're turning from an uptrend to a down, from a sideways, in this case, a sideways trend to an uptrend. And guess what? During that time, the 20 moving average will have enough time, enough bars that it starts really turning upwards. So, what is this catch play? I can't call it a VBS because the 20 is really not upwards yet, but it uses a lot of IFT concepts, everything that we just went over. And here's what it is. I've been going sideways. The sideways trend is broken. I form my first higher high and my potential first higher low. And what Brian mentioned is now we have this pullback again, like a market law 3 pullback. Maybe I could try a long if it triggers. I'm not going to call it a VBS because I don't have an upward 20. But I might be catching, if this has follow through, if the next 3 to 5 to 8 bars, according to market law 3, go up, I may be catching the turn of a trend. That's where the phrase catch comes from. You cannot call it a VBS because the uptrend is not confirmed. But could you take your IFT concepts, your concept of ignition, your concept of higher highs and higher lows, your concept of market law 3 pullback, can you use that and try a catch play, which means you might be catching the turn of one trend to another? Yes. So, Brian, in order to have the answer to your question is, in order to have a change of trend, yes. To do the catch play, no. The catch play I can do right here. Finally, after 3 to 5 to 8 bars back, subsequent bar takes out a prior bar, enter there. I would put my stop right under the low. Now I can't call that a VBS because look at that 20, it's still sideways. But I can call this a catch play because if it does catch in advance, boom, right there, I've caught the change of trend. And I recommend that people stay away from this for 2 reasons in the beginning. Number one, it becomes a mishmash of things. People start saying, well, I took the VBS, I had the pullback, and they just don't know enough. They're not able to articulate yet that I did a VBS without an uptrend. Well, that's not a VBS. So I find it more important that people, whatever they're doing, and that's why I create these, series of bullet points for VBS. Do you have an upward 20? Yes, check. No upward 20? Boom. Don't even go to point 2. But if you came to me and said, and you were hitting upon this, oh, I see ignition out of a base. Now I have a pullback. I don't have an upward 20, but I do have a new higher high and a potential new higher low. Let me try playing off of all that and do a catch play. So the first reason why I don't like people doing catch plays very early on in their trading career is because they don't know enough yet. They're not seeing the distinctions of upward and downward 20s. It's just giving them an excuse to jump into anything that seems to be changing a little bit. Am I making sense on that point, Brian, and everybody else? Excellent. Here's the next reason why I tell people not to do catch plays until you really understand them. Let's get back to full VBSs and VSSs. Let's get back to full VBSs and VSSs. Here we are with the VBS. I'll use a black line rather than, well, you know what? I will use a black line and I'll use bars to show the pullback. Okay. There's a VBS, upward 20. We're about 4 moves into it. We get our market law 3 pullback. According to IFT, your average type of VBS, like you see on the diagram I just drew, what's your probability of success that this works? What is your probability of success that it does not stop out on you? Approximately, what percentage would you say? It's interesting because the correct answer is more in between what Brian and James said. It's more in between. James and Perry, you're absolutely wrong. 50% is too low. That might be what your experience, but the core strategies that IFT teaches you, and here's what helped me when I finally thought about it this way. The core strategies, the VBS, VSS, the gift plays, the breakout and breakdown plays, they are designed to be at least 60% or better. Why? Number one, 50-50 is okay, but it's no better than flipping a coin. And IFT wants you to be equipped with at least tools that are better than, no, Perry, it's because, right, because no, nothing to do with the 3 to 5 to 8 moves. Don't get stuck on that. I never qualified the probability of success. Well, I take that back. Based on what I've drawn, it has nothing to do with the 3 to 5 to 8 moves, right? This is a nice middle-aged trend, right? 1, 2, 3, maybe working on the 4th move. A nice, healthy middle-aged trend, right? So, if this was something like, if it looked something, if it looked something like this, and it was about the 50th move, I would agree with you. I would agree with you. Oh, the probability is starting to diminish, but come on, this is right there, right in the heart of the 3 to 5 to 8 average moves. The probability is still about 60%. Okay? The probability is still about 60%. Night and day difference between diagram A and diagram B. Night and day difference. Diagram B has, I don't know, what did I draw? 20 moves, 30 moves there. I mean, that's getting really old. Diagram A is right in the heart of the average of 3 to 5 to 8 moves. So, by design, the VBS is made to be 60% or better, at least to give you an edge over just flipping a coin. If IFT didn't provide you some sort of edge over flipping a coin, I would just tell you, just flip a coin. Heads I go long, tails I go short. So now, Brian, I think you said 70%. Is it quite possible to get really good at these strategies and be in the 70 percentile? Absolutely. Absolutely. But right out of the gates, it's designed once you start getting this to at least be a hair better than flipping a coin. 55%, 60, 65%. Could you get really good and get into the 70 percentile? Sure. Sure. There are years or like 5 year streaks where my not my gift plays, but my gift plays. I think I had a 5 year streak where I had a 76.6. I think that's what it was. 76.6 positive batting average. So sure, you could get really good at a strategy. Now, let's take the other side of the coin. Let's take the other side of the coin. Fortunately, nobody said like 90% because that's near perfection, and near perfection does not exist in trading. So let me circle back around to this catch move or this catch strategy. If I took this VBS type of looking trade, now it's not a VBS because the 20 is not upwards. But if I said, all right, I ignited, I pulled back, I'm forming my first higher high, I'm going to take a trigger off of what may potentially be my higher low, I can't assign a 60 some odd percent probability on this. Why? Because I do not have a rising 20. So the way IFT looks at this, if you decide to give this one a shot, it's just as equal that it can go sideways, it can go up, or it can go down. It's still in that transitionary phase. Yes, it has ignited bullishly. Yes, it has broken the sideways trend. Yes, it has formed a new higher high, but it doesn't have confirmation until it takes out that higher high. So right now at this stage right here, and even look where that price action is. Don't get so suckered into the last 6 bars that you ignore the rest of the chart. Okay? Take a look at this. Your price action is smack right into your sideways move still. Where you are right now at this moment, the probability is just as equal as going up, going down, or continuing sideways. So it's acceptable from an IFT perspective. It's even odds from an IFT perspective, but you don't have that positive edge of 60% or better. Why? Because you do not have an uptrend yet. So now the negative is, in my view, if this did trigger, let's say tomorrow's bar looked like this and it triggered. You went in here and you put your stop right underneath. The negative is that it's just like an even odds play. Just as high probability that it'll get stopped out as it is that it'll be a winning trade. Why? Because you do not have an uptrend yet. So it's acceptable, but there's no real edge to it from a probability standpoint. That's the negative. The positive is if it does work, you might be at the beginning of a brand new trend that may just keep going, going, and going. Everything in trading has a positive and a negative to it. So while we're on this topic, and I will wrap up shortly, we've been going for about an hour, and I just, we did some chart scanning, but I used Brian's question to basically do this fantastic review and reinforcement of actually several things. Um, uh, 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 Trend, change of trend, market law 4, the VBS and VSS, the catch play, ignition out of a base. Think about how much we've reviewed here. But let me just do one more review this way. Let me do one more review this way. I need to go find a diagram, the diagram that I used a couple of weeks ago when we did this lesson. Hopefully I have it handy and I don't have to search. I do not have to search too far. Nope, I'm not looking out. Let me go get it. Give me a moment. It'll just take me a moment. Okay. I bet you now some of you are recognizing this diagram and recognizing the lesson that we did, not too long ago. All I need to do is to add to this is to draw the 20-period moving average. So let's talk about the market law for the whole complete market law for number one. Number one, how many moves down do I have? Well, approximately, I'll count back there. 1, 2, 3, 4, 5. Okay. Within the average of 3 to 5 to 8 moves. Not a very young trend, not a very old trend. Middle age, maybe just starting to push a little bit beyond the average norm of the 3 to 5 to 8. Okay, fine, that's all. Point number one in market law 4 is where, here, I'll do A, B, and C. Point A is where are we in the count? We've done about 5 moves. The average is 3 to 5 to 8. Does that mean a trend can have 2 moves and end? Sure it can. Does that mean a trend can go for 475? Yes, but that's an extreme outlier. I think the most I've ever seen a trend go for in all these years is about 40 moves. And I think I've seen that maybe twice out of 2 decades. So now, is this downtrend broken? I would say the answer is yes. One bar probably closed above and another bar went further. And that's the significance of that line right there. So point B, point A, we're about 5 moves into it. Point B, we did have a market law 2 break. So the downtrend is over. The downtrend is over. Now here's my first quiz for you. At which green dot, one, two, three, or 4, is the first time I could say the downtrend potentially turned to an uptrend? At which green dot? Let's see who's really been following. Brian says 2. Any other takers here? Wow, we have a dozen people in the room. This is disheartening for me when I can only get 2 answers out of. Okay, Brian, and Perry. What, Perry? You just changed your answer. Brian and Perry. Okay, it is number 2, right? You need to form a higher high, a higher low, right? Number 1 is the first higher high. Number 3 is the first higher low. And then number 2 is the one that takes that out. So it's at dot 2 is the first time that you could say your potential downtrend is turning to an uptrend. And guess what? Guess what has had time to potentially catch up during all that movement? Your 20 moving average. Okay, here's my next question. At which green dot is the first time that you could potentially do an IFT catch play? At which green dot is the first time and only time on this chart you can potentially do an IFT catch play? Excellent. Excellent. Victoria and Brian are right. And Brian, your last two answers have been correct. So I feel that all this time answering your question has been worthwhile because I think now you're seeing it a lot more clearly. Does that make sense, Brian? So 3 would be the first time right because number 1, the downtrend's over. Number 2, well, number 1, the downtrend had 3 to 5 to 8 moves. Number 2, the downtrend was broken. Number 3, you formed a higher high. Number 4, you might be catching the turn of a trend. The setup down by dot 3, if it has follow through and creates your second higher high, that means you might be catching a change of trend. Excellent, Brian. Excellent. Repetition is really important. All right, everybody. I'm going to call it a wrap. I really enjoyed this. Came into the session with nothing, no open trades, no open lessons, no open questions, and look at what we've covered today has been pretty enormous. Covered the overall markets, covered the specific chart for Brian, and we'll go from there. We'll go from there. Now, you know what, Brian? You know what? I apologize. You mentioned Riot also. I wasn't ignoring it. I just forgot it. So that's the discussion on Coinbase. Let's take a quick look at the RIOT chart. Let me find it here. That's okay, Brian. This will be quick. I'm not going to use it to leverage another 1 hour lesson, but I'll take a quick look at it. And let's get the help from our friends in the room. Let me do a couple of quick quiz questions, and this will do it all. Here's the first question. What would you say the trend is on this right now? This is RIOT on the daily. Is it number 1 an uptrend, number 2 a downtrend, or number 3 a sideways trend? What would you call the trend right now? 1, 2, or 3? Okay, I'm with everybody. Now, in the sideways trend, equal highs, equal lows, yes or no? James and Brian, where's the uptrend? The only thing I see right here is that. See, I know what you're looking at. You're looking at the 200. We do not determine the trend on the 200. We determine it on the 20, and that 20 is dead flat. We're making definitely equal highs and equal lows. Okay? Next. Coinbase did ignite out of the base. It did ignite out of the sideways trend. I'm just asking yes or no. Has this ignited out of the sideways trend yet? Take a look at everything I'm drawing here. A flat and wavy 20. Definitely not an uptrend. Flat and wavy 20. Area of equal highs. Area of equal lows. Have we ignited out of the flat base? The answer is no. So, Brian, your answer on this is that you're still in a sideways trend. You're still in a sideways trend. Now, here's what I think visually or subconsciously the people that said uptrend caught. I think you're subconsciously or consciously, your mind's caught the direction of the 200. Definitely not the direction of the 20. Right? Take a look at the difference. That's a downtrend. This is just sideways. So could you, now let me ask here, at IFT, even though it's not an IFT strategy, are there any principles that say you can play long the bounce off the support of a rising 200? Here, I'm sorry, that was too rambling of a question. I'll just answer it. Sure you can. You know that the 200 is the most substantial support or resistance at IFB. Could you play the bounce off of a 200? Sure you can. Is there a name for that? Is that an official one of the three core IFT strategies like VBS, VSS, gift play, or breakout, breakdown play? No. You would just say, hey, it seems like every time we come into the 200, it holds. I'm going to try something off the support of the 200. But you can't call this you can't call it a VBS because you don't have a rising 20. You can't call it a catch play because you're still currently in a sideways trend. You're not catching the potential first move. Could you say, I'm going to try a VBS type of trade, but I'm going to work it off of a rising 200 instead of a rising 20? Sure. But these subtleties over time are very, very important. Otherwise, you're just finding things everywhere. You're not understanding the deeper subtleties, and that's kind of the purpose of these, if you want to call them, expansion programs or break-off programs from the core equities program, right? The equities program, the equities day trading program is more or less like the center of the universe at IFP, and all the rest of these programs, like the swing program, are a break off of that because it gives us opportunity to get deeper and to specialize in what makes a difference to a swing trader. So that's why you'll hear these subtleties much deeper here than you would in the equities day trading. You would hear Dan just say, no, that's not a VBS, let's move on, that sort of thing. Here, the subtleties of, the what direction is the trend really? What is the true support and resistance you're working off of? Do we truly have a market law or change of trend? All that sort of stuff is significant. Significant. And let me do this once again, just so, and I promise this will be the last thing. Now, I've scrolled back to May. Okay, whole different story here and there. I mean, this really was a wild one in the first half of the year, but basically went sideways in a very wide range for a very long time. But then it did do a downtrend, right? There's the downtrend. Then think about this. Downtrend was broken here. Then you formed your first higher high, your first higher low. In addition, you had the support of the 200, and then that was taken out. Now, let me scroll just a little bit further. Now, there's enough there. See, it's taken out. There's enough there to say, I formed a higher high, a higher low that was taken out, and maybe now I can work bullish uptrend movement. Boom. But then ultimately, it hits a point where that did not last too long, and you go sideways, and you're still sideways. All right, everybody, great session, long session, but great session. Something's happening in the general market. Really, it's only observable on the small time frames, 5 minute and below. But I know what it is. It must be the Fed minutes. The Fed minutes were released. Now remember, that's red news. Be careful during red news. We don't trade red news. We wait to see the patterns that form after red news. But on that note, let me call this a wrap. And if you need any of the recordings from the last, I'll say 2 weeks. The first one I'll post in here is from last week, and then I'll post the recording from today if you arrive late. Other than that, I look forward to seeing you in the 1 o'clock hour on Wednesday.